everyone, this is Claudia here from the Bookkeeping Experts. I am back for more information on QuickBooks Online. I've been an accountant for a long time, over 20 years, using QuickBooks Online, Xero, and just analyzing your financials in general. We want to help you understand how QuickBooks Online and how accounting system can help you understand your business so you can take it to the next level. Today, we're going to talk about the balance sheet and what are the errors or what are the things you should be looking at on your balance sheet after you do all your monthly financials. Means, what is the workflow of QuickBooks, by the way? First you're going to categorize all transactions that are automatically coming through QuickBooks. That's why we love QuickBooks Online, because everything comes automatically from your bank feed as long as it's linked the way it's supposed to. The next thing is reconcile all your bank accounts and your credit card. Make sure that there is nothing left except for transactions that didn't clear until the following month. And then it is time, after you reconcile, categorize, make sure everything is right, it's time to look at your balance sheet. The balance sheet you want to look before you actually even go to the profit and loss, because on the balance sheet you can locate a lot of errors, such as where is your understated income or overstated income, if there is a negative liability account, where is the liability itself that might not have been recorded, or maybe you didn't record your interest expense. So there are so many things to look at the balance sheet. But like I said, the balance sheet is essential. So you want to make sure you take a look at the balance sheet before you actually dig into the profit and loss. Okay, so without much further ado, here we go. Okay, so here is our balance sheet. How do we find our reports? On the left-hand side menu, standard reports, select the standard balance sheet, and here we go. Here is the balance sheet. So a couple of things we want to take a look. First, you're going to see your asset accounts. That includes your bank accounts, your cash accounts, and any kind of assets, right? So your furniture, your equipment, your cars, whatever. So first is going to go your assets account. Now, one of the assets account for you to take a look at is your clearing accounts as well as undeposited funds. And the reason why you want to pay attention to that is that here lies the possibility of duplicated income. So if you see that the balance on a clearance account is too high, by the way, the ideal is to reconcile those accounts as well. How do you reconcile? It depends on, if it is a clearing account, it depends on what third-party app you're using. If it's Square, you want to go ahead and reconcile Square according to what it is in Square. Same thing with Shopify and any other third party, right? Clearing account is where, if you are connected or integrated with QuickBooks with a third party, that's where the balances stay until it clears into the checking account. A lot of times, I can see fees that were not recorded in Shopify, or if you use Toast, for instance, if fees were not included, or if, maybe there is transactions that were supposed to be recorded, such as payables, tips payable, or whatever it is. You want to make sure that all the items that needed to be deducted from that clearing account is deducted properly. All right, so next, undeposited funds that is not here means that we don't have any issue, or payments to deposit. I'm sorry, it's right here. So undeposited funds or payments to deposit is the same thing. It's an asset account. And what it is that it's when you receive the money, it's the workflow of QuickBooks. When you receive the money, you're going to record the payment. Okay, and after you receive the payment, you're going to send it to payments to deposit, record the payment to deposit, and then you're going to record the deposit. This is especially important if you deposit multiple checks at the same time, Because if you record directly to the bank account, you're not going to match that transaction because it's multiple transactions. Or if you do match, you may have something that is off. You don't want to do that. You want to send to undeposited funds. And then from undeposited funds, I'm going to show you what we do. We record the deposit for the amount that was deposited in the bank. Okay, so if it is multiple checks, let's suppose that those two are together, you want to select, or those three, the dates, look at the date, right? July. Okay, suppose those three were all deposited at one time, was $32,000. I want to make sure that I record this deposit. So that's why I send it to undeposited fund, so I can find it later. How to find that? I'm going to go back one more time. So you're going to do the plus new, the bank deposit, and all items, all payments that were recorded correctly to payments to deposit are going to be sitting over here for you to select and record the deposit. You want to make sure you match the date. And then after you record the deposit, this is a sample account, so it doesn't clear the bank. But after you record the deposit, you want to go to the bank feed and go to the proper bank account and then match it, right? So here, by the way, there's some, it's not the same, but some that I recorded before. And on the new interface of QuickBooks Online after AI was implemented, you see the interface looks a little different. You have two matches here when you do have a deposit recorded correctly, or when you do have a transaction that is matching to what happened in the bank feed. And you want to make sure that if it is income, you are recording or matching it to a deposit. And if it is an expense, you want to be matching it to a bill payment, not to a bill payment, to avoid errors, right? Okay, so the first match here, this is to search for something that would match if this is not the correct match. Okay, but if it is the correct match, and you see this green match over here, you're going to see this blue here. You wouldn't see that if there is not an exact match, okay? But if there is, you're going to see the blue match. It is going to match this transaction to this green deposit here. So that's all I got to do. Okay, match. All right. So if it is correctly done, I'm going to refresh this for you, and you're going to see that the payments to deposit is going to lower by a lot. The only payments to deposit that I'm going to have here is the $500 that's actually still sitting on undeposited funds. Let's suppose that it did not clear yet. So if we go to bank deposit here, still sitting over here, maybe it didn't get deposited, or maybe this was deposited to a different bank account. If that's the case, we select this and select the correct bank account. Let's suppose it was your personal account, or it was cash and you spend it. You want to go ahead and record it to the proper bank account, right? Okay. All right. So I'm not going to record this one. We're just going to leave it there. It's okay. And let's suppose it was never deposited yet. You will see this payment to deposit. And I actually had problems with clients. No, not me. My client had issues when they came up to me to get help on cleaning up their accounts, that there were some transactions sitting on undeposited funds that never were deposited. It's coming from QuickBooks payments or other integration payment, because it never got deposited to the bank account, because the payment was never processed correctly. So this process is very useful, because if you're looking at the balance sheet and you see this amount really high on undeposited funds or payment to deposit, it means that something didn't clear the bank or didn't match correctly. So if it didn't clear the bank, most likely you never got paid on that, or maybe you're sitting on a check that never got deposited. So you got to resolve those things. That's why you have this whole process of undeposited funds or payment to deposit. It's a safety process, so you can make sure that every payment is accounted for. Okay, so that's why we do the way we do. So you want to make sure that if it is there, you do address this issue, okay? Other things to look for is a negative liability. So American Express is negative. Of course, the reason why it's negative here is because as this is just a sample account and doesn't have income and expenses automatically or transactions being automatically coming to QuickBooks Online. But in many of my clients' cases, it could be a negative amount means overpayment. And that overpayment could be because the payment was duplicated. It happens a lot with QuickBooks, especially if you use that matching or pairing option. I've seen errors on that. So usually what I do is just record as a transfer and make sure I match it on the other side, okay? The other issue on a negative liability is because the liability itself, if you have like a car loan, for instance, the principal amount that you owe was not recorded in QuickBooks Online. So you need to be able to record that. Or if it is a mortgage, maybe you didn't apply the interest expense. And if that's the case, you want to make sure that you record that interest expense. You can record by using a journal entry, and you're going to debit interest expense and credit the loan account or the mortgage account so that you can increase the liability or record that liability properly. Okay. Also take a look at your other liabilities. So gift card means that obviously the liability wasn't recorded correctly. Or your undistributed tips, if it is too high, maybe you paid with cash and your cash account is really high, but you didn't record it. You want to make sure you record that. How do you record that? You're going to do a journal entry again, and you can move the money from that liability into the cash. So you're going to credit cash and debit the undistributed tips because you want to lower that liability. So you debit to lower, you credit to increase the liability. With an asset account, you debit to increase, you credit to lower. So sorry if this is confusing. Okay, but basically that's how it works. Remember, if you're recording a journal, there's always a credit and a debit. There's going to be a credit and a debit that needs to match each other. So you want to make sure that you match it correctly. All right, so another errors that I see quite frequently is going to be on the equity, and that's for owner's draw. Owner's draw, basically, if you're paying yourself, if you have a sole proprietorship and you're paying yourself as owner's distribution or, owner's draw. Okay, so that's going to be a negative amount. Okay, that means you're taking money out of the account. And at the end of the year, what you want to do is a journal entry to remove that. So you want to remove that owner's draw and zero it out into retained earnings. Okay, same thing with opening balance. And sometimes opening balance is supposed to get out of here because what it is that whenever you connect or disconnect a bank account or credit card, it can generate an opening balance if there is one. And a lot of times you just have to delete because the transactions themselves are there. You can find that when you reconcile the account. Okay, so there's a lot to do on the balance sheet. So those are some tips to help you understand and fix those issues. This is a very extensive topic, but I'm going to go back here. Okay, I'm back. I'm going to go back here. And if you need additional help with that, keep in mind we do provide one-on-one tutorials as well as ongoing bookkeeping and cleanup as well. So if you want to get this off your hands and be able to focus on your business, yes, contact us. We can help you out with that. We have wonderful accountants that are specialized in cleanup. We want to make sure that your books are ready for you, not just for your CPA at the end of the year, but for you to be able to run a successful business. because you do need to have your point of reference. I talk about that over and over again. It's because it is the key for your success. You need to understand your business financial, where you stand financially, to be able to continue to grow regardless of what's going on with the economy. Because if you know exactly where your business stands, you can take appropriate measures to continue growing no matter what. All right. So I hope to see you next week. And until next time, keep on smiling.